Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about a cement company, that's Ramco Cements, with a very you can say subdued numbers they have come up with. So let's understand whether you should invest in the company and what lies ahead for Ramco. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I start with Ramco Cements, here's a small request that kindly support me on Patreon, and those who have supported me on Patreon, thanks a lot for all their help. This will help me to grow my channel even better and motivate me to put up more videos, interesting videos, and do more analysis on each stock that I'm doing. You can take the tiers of $2, $5, $10, and $25 on Patreon, and you'll get the benefits of it. And once I have 100 Patreons, I'll start with an education course on investment for no additional fee on YouTube for free. Now about Ramco Cements. It is the leading mid-cap cement company headquartered in Chennai. They primarily work in business of providing cement and cement products in South Asia. Their products include Portland cement, ready-mix concrete, and dry mortar products. So more or less, they produce different types of materials for housing, and they also sell electricity produced from their windmills and thermal plants. So they have a slight portion, 3 to 5% portion coming in from electricity that are produced in windmills and thermal plants. So renewable energy part is also played by Ramco Cements. The dividend payout ratio is pretty good, and current total production capacity of Ramco is around 16 and a half metric ton per annum. So million tons per annum. So 16.5 is what the capacity is. If you look at the numbers of the company, then the market cap of the company is around 18,000 crores. So it is not a very small cap company. It is a mid cap company in that sense. The sales have come up. So sales went up by around 5.5%, whereas the profit has dropped by around 5% to around 95 crores. A higher raw material cost has hurt the numbers. That's what I saw when I looked at the numbers very closely, and the return on equity of 11% is pretty low considering the kind of business that it is into, and the operating profit margin is at 22%, which is decent. It currently trades at 29 times earnings, which is not cheap but not very expensive either. Many of the cement companies have run up over the last 1 year or so. You look at Shree Cements and many other. So why is the slowdown? That's what one needs to understand. But before that, I would like to tell you about how has been the performance. So the stock has been flat on a 2 year basis. So the stock performance has not been that magnificent if you take a 2 year chart. In fact, just 6 months back, it was down around 20-25%. But with the move that came in after August in these kind of stocks, now the valuations or the stock price is pretty much at the same level as it was, say, around 2 years back. It has recovered from September lows. That's what I wanted to say. And the numbers have not been very bad, but they have not been very encouraging either. And that's why the stock has not run up the way other marquee, you can say, mid cap or large cap cement companies have done, although they have also receded from their highs. Uh, the dividend payment, although has been consistent, but it has been reduced sharply from the earlier levels. And strong domestic and institutional holding in Ramco Cements, only 12% free float is there. The biggest problem with the company is the increasing debt. So the debt has kept on increasing. So it was around 350, 370 crores. Last year, it's around 460, 470 crores now. So due to increasing debt, they have to pay a larger amount of interest over a quarterly period, and that's where the bottom line is getting hurt. So, why is the pressure on some of these cement companies over the years, and why have they not performed the same way as they were expected to, say, 4 or 5 years back? Domestic economy, which has gone under stress, and people were of the opinion 5 years back that currently by 2020 or 21, the economy would be growing at around 7-8%. Right now, the economic growth, as told by the government, is 4.7%. In FY21, it is not expected to grow even further because of the scare in China and many other things. It is expected to stay at the same level or probably dip even further to around 4.3, 4.4%. At these levels, you do not expect many construction activities to continue or leverage businesses to continue. And if construction, real estate, and infrastructure activities do not pick up in a big way, these cement companies will not be able to do that well. So, retail sales have shrunk, corporate sales have shrunk, the raw material cost have kept increasing. All it has been, you can say, on a rise, or it has been elevated for the last 3 4 years, ever since the oil prices came back from those lows of 27 $28 per barrel. Right now it is hovering around $50. Yes, there have been a slight dip in oil prices, but then the business is virtually gone into abysmality in India and abroad. And there's a projection of further stress in the next couple of years. So it is not that currently people are thinking and very positive about the infrastructure space, about the ancillary of infrastructure to do well, such as you look at wires, cables companies are not doing that well, and similar is the fate with cement companies. So the sector has gone out of favor. People are not looking at the cement sector in that manner, although some of the large cap cement companies have done well. But for mid cap or small cap to do well, the economy has to really do well. So my call in this stock is, if you have it, then you hold it and probably wait for the next 2 to 3 years, and you'll get a decent price. Hopefully, the market would pick up in 24 to 36 months. You can buy incrementally over the last 1.5 years or so, if you have it. So you can average over the next year, year and a half. If you don't have it, probably look at pure consumption plays. I've always told you that even in difficult times, pure consumption play become defensives, and they do reasonably well than the market. And when the times are really good in the market or in the economy, these are the consumption play that really does do well. And people do not realize it because they don't go up 20% every day. They go up 2 3%, and over a 1 year chart or a 2 year chart, you'll see that they have doubled nearly. So if you have it and you want to average it, take it as a long term trade, as a commodity trade. And remember, this is like a commodity and not like a consumer business. Most of the cement companies, I would say that you go ahead and think of it as a commodity play, and whenever the cycle turns around, these stocks would do well. It's a 6 year play, and there will not be any immediate benefit. Avoid trading into it and put only 5% of your total investment. So this was my video on Ramco Cements. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.